The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 29th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, no problem. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow off 435 points, trading out at 24,318. That's about 1 3/4% to the downside. S&P is off 35 points, 1 3/10%. She's printing at 2686. NASDAQ off 48 points, 7/10%. Russell 2000 down only 4/10%. That's 6 points to the downside. Semiconductors off 11 points. Trannies are down 150. Spot volatility index, that's the first thing that should pop up in your on my screen, that is now on your screen, where you're saying, hey, Steve-O, look at that move. Greater than 10% one-day rate of change. Let's see what it is at 4 p.m. But right now, a 28% move to the upside. Gold is back $1.40. Silver is down 12 pennies. Light sweet crude off $1.64. It is a 30-year bond that's got a 1 4/10% rally to the upside. That is even off of its session highs as we speak right now. Leading the charge, the upside, dollar-wise, it's American Woodmark Corp, AMWD up 14% or $12. Coherent is up 7% or $12. Universal Display up nearly 8%, nearly $8. Equinix up 7. To the downside, it is Booking Holdings off $47. Mercado Libre down 20. BlackRock off 15. Google down 15. Certainly, we have things to look at. Of course, I want to look at what you want to look at as well. Let's first take a look at what the market's on, and I don't have any requests just yet. So let's take a look at what the markets are doing, what they're trying to do, what they need to do, bullish or bearish out here. And we'll begin with the NQ, I think. We'll begin with the NQ because it's generated it's generated everything that you and I need to know about the market as we speak. If we take a look at the high out here, the high that I'm referring to on a 30-minute time frame chart, that's important for me to share with you. This is coming from 2:30 in the morning, and this is not yesterday but the morning before. And as we take a look at it, we start doing our wave count to the downside. You got to letter G when it formed this little hammer candle at 12:30. Now, price was also moving lower, doing less relative energy. It also was the completion of an A to B equals CD pattern. So you have numerous patterns that were forming inside a 30-minute chart, albeit inside the NQ. Was it trying to form a bottom? The answer is absolutely. The very next candle session, you had a nice little bullish engulfing candle. That's not so important. What's important is it did close above Stevie's red line. But, and I do mean but, what it did was it found resistance at the bottom of that 30-minute profile. So we do not have proof, and you and I need proof. It is simple as that. We need conviction that, in fact, the NQ is ready to bottom. You've got the bottoming patterns and signals, but it has not proven itself to you. It's got to get and close above at least 69.32. We'll call it 69.33. Then you could have price moving up to the 69.66. What if it doesn't? Well, it just tells you where the first, in essence, the primary stage of attack has taken place, where the market could or should bottom out here. That's what the NQ is doing. Now, the interesting thing, the NQ, which is very strong, Russell is even stronger, but inside the Russell, I do not have a bottoming pattern because it's so strong. It hasn't made wave number G. It hasn't moved lower with less relative energy. It hasn't done nada, zippo, zilch in order for you and I to use that in order to identify bottom. Just tells us where money is flowing into. If we take a look at the ES mini, a different story. If we take a look at its 30-minute chart, same kind of, and I say kind of pattern out here, kind of because it did make wave number 7, letter G. If price was moving lower, doing less relative energy, we did get a bullish reversal candle. That was in the last session, but price failed. Forget about the bottom of its 30-minute profile. It could not even get above Stevie's red line. And you know, when you can't get above Stevie's red line, there is no confirmation to the upside out here. And at this stage, you're not having any follow through. Now we have 17, 18 minutes left in this trading candle on a 30-minute basis, so we can't really call this. The card has not been dealt to us. Although, as it's being dealt right now, it's not looking very good from the follow-through standpoint. What you'd really need to see in order for the ES mini to give you any type of inkling of a bottoming signal is at least closing above the bottom of the 30-minute profile. Now, this profile may vanish a half an hour or hour from now. But as we speak right now, the number is 2693. Trying to form a bottom? Absolutely. Giving you the signal that it has? Absolutely not. And we can see that that is the same as we take a look at the 30-minute chart for the Dow Equity Futures contract. In this case here, also makes wave number 7. Does so how? Less relative energy. When is the first time with this pattern that we see the bulls try to take charge? Well, it was also as we came into the one, well, not also, it was as we came into the 1 o'clock hour as we were coming on this show. But you can see well away from Stevie's red line out here, which is priced at 24,411. So there's no confirmation yet of a bottom. But if you were to ask me, is the market trying to form a bottom? I would just simply ask you the same question, because we take a look at these patterns. The answer is clearly yes. But you and I need a unanimous decision out here, and we do not have it. Maybe we'll have it as we come in towards that 2 o'clock close of the show. Maybe we won't, but you know what to look for. What else do we need to go take a look at out here in the next 15 or 20 seconds? How about them bonds? How about them? What are they doing, and where are they headed to? When we get back from this break, we'll go take a look at that. We'll go see what else there is to take a look at inside the equity futures contracts. But everybody around the world, or those people trading in major currencies, are buying the 30-year because they've broken out above resistance on all of their daily time frame charts. Looks like the 30-year Treasury headed back to the highs from April the 2nd out there. Steve Rhodes with TFNN. You're going to ask me where that's priced at? In the 147 level. Right now you're trading 145. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were talking about 30-year treasuries, and I was sharing with you the chart of T-bonds in the major currencies out there, the euro, the yen, and the Great British Pound. You'll see some red dashed lines across my chart on each of these charts out here, and those simply are previous swing points. And so the way you can take a look at it, you know, much like when we talk about an A to B equals CD, that B point in essence is the swing point that we're using. And so once price gets above that, it could be a confirmed A to B equals CD, but it gives you a price projection out here. The bottom line is a swing point shows you where there was a change in trend. And when you are able to close above or below that, it says that that change in trend has now been overtaken and there's a new trend in town. In this case here, closing above a prior swing point, you then just simply set your targets at the next swing point, assuming there's one that is there. Now, we can take a look at Fibonacci retracements between swing points out here, and that certainly would be a way to go ahead and project price. But at this stage, the question is, or what you need to know, or what you might want to ask yourself is, you know, why would anybody go ahead and move into long-term dated U.S. Treasuries out here? And the answer is, well, everybody is moving into them. If you are a trader and you are sitting over in Europe and you're trading in euros, you're looking at the 30-year Treasury, you're not really concerned. Oh, you are concerned, quite frankly, with regard to, even though you're buying it in dollars, you want to understand what's going on inside of your currency out here. That's what's important. That's what is so important out here. The same thing if you're sitting over in Japan. The same thing if you are sitting over in London as we speak. And as we speak at this stage here, everybody is piling in, which should then continue to send price up to the next level. The next level, as I see it, inside of T-bonds, is just simply its prior swing point. And that was the April 2nd level. That's looking at it in the case of U.S. dollars. If we go take a look at the 30-year Treasury, which we'll do, and we go ahead and put up its TAS market profiles, which we will also do as soon as I can find it, I do know that price is trading above the daily top of the box out there. Well, that's an understatement. And now we can see that at 146 and 19/32 is the top of the weekly box. So I gave you a value of 147. 146.19 would really seem to be the next target. Boy, you close over that, then certainly 147. And above 147, man, it's a whole different game. Let's just take things one step at a time. But the demand is coming from everywhere, because on every single person's trading desk that is trading the 30-year Treasury, price has broken out. We had a request come in from Ken. Ken from Wyoming. Ken, thanks for taking the time to write in. And Ken asked if you and I could go take a look at ticker symbol SBRA, which is Sabra Healthcare. It's a real estate investment trust out here. And as we take a look at it, speaking of swing points, what we can see is that today it is testing a swing point. The swing point I'm referring to is May the 10th. The high is 2059. The top of its daily profile is 2059. Now, Ken, the volume out inside of this on that trading session was 3.6 million shares. So you do not have the conviction to take out that swing point. Price still may do it, albeit with very light volume, because right now you're at 685,000 shares. Nonetheless, if you close above a swing point, that would be 2059, price can move higher. This is making a very nice series of higher highs and higher lows out here. So in this case, we can see that the trend has changed, but just not taking that swing point out with conviction, which really means with volume. If we take a look at the weekly time frame chart out here, well, price moved above the swing point from December 18th. That had 8.4 million shares. That's what you're really trading into. And price was coming into it with 11 million shares back on the week of May 7th. So that is a positive. And in this case here, if you are long this, and I were just looking at this chart, knowing that on a weekly basis, price was moving into with some volume, with some conviction out there. And that, again, is just looking at the December 18th level. I would say the price target for SBRA, Sabra Healthcare, should be the September 18th, 2017 area between 2211 and 2379. That is what the weekly time frame chart is showing, Stevie. In the monthly time frame chart, Ken, you may encounter a bit of resistance if you are in this at 2139. That is the top of its monthly profile. It is a brand new profile, came out here in the beginning of May. No idea if that will hold as resistance, but as your pilot, I will say you want to put on the fasten seatbelt signs, probably will be put on in about another 40 cents out there as price gets up into the $21. So thanks for writing in. I hope that that helps you out. If not, write back and I will re-look at it. We've got we've got John in Sarasota. And John's question is, hi, Steve, how high for the euro, the EUO? I'm assuming, well, let me just make sure EUO is not any kind of ticker symbol out there for something, because it could, well, it is. It is for the pro shares, ultra short. So as we take, and John knows, the only way for me to really answer this question is to go take a look at the currency pair. So we're going to do that. But just so that we've got, up-to-date data, because my currency feed is about a 10 or 15-minute delay, so I'm just simply going to go look at the Euro futures contract out here to try to answer that question. And as we take a look at it, how low for the euro? Well, I can share with you that closing below the day of December 13th, which it did a couple of days ago, certainly was yesterday out here. And that low, by the way, was 1.17. That was a cataclysmic. Can I say that? That was a major failure of a support level. So now we need to just switch over from the daily time frame chart. We don't need to, but we will. We're going to switch from the daily time frame chart to the weekly, see what it is that Stevie can see. So the question is how low? I would say from a weekly perspective, we are now in week number 7, it appears, of a Tom DeMark setup. Count. You could, if this continues, we go to a 9 count out here. So suggest price should continue lower. Doesn't have to, but it's a decent possibility. Decent possibility. It's a fairly good probability. Okay, that seems real. But you asked the question, how high can the ETF go? We're going to answer it. Well, what's the price target for the euro out here? And in this case, I've got to come all the way down to the low of the week of June 23rd, 2017. And that low was 1.1173. And that would really become my target out here for the euro, taking a look at its weekly time frame. You can see that if should it continue lower, the euro that is, eventually on a weekly basis, the price oscillator would get down to zero, and that should then stall price. But maybe that's going to happen as price gets down into that 111 area. If I look at this from a monthly perspective, just trying to see if I can identify for John in Sarasota any other levels of support that I am overlooking. And while the chart here updates, the answer is, well, on a monthly basis, the month of May, not a good thing because it was a test of Stevie's red line. And now price is below it. Now it's at 117, Johnny. And now the euro has a falling price oscillator below zero. You don't think that's bearish? Go back and look in the 2014 level when it was careening lower. Steve Rhodes with TFNN. Euro headed lower. EUO headed higher. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Bob in Colorado wants you and I to go take a look at ticker symbol CIEN. So let's go do that. And what Bob is looking for, could you show the TAS profiles on CN? I'm looking for a long entry for a trade. So let's do that. We'll give Bob those TAS profiles for the daily, the weekly, and the monthly time frame. So in the daily basis, Bob, the bottom of the current box, which formed 2 days ago, so Friday, is 24.94, and you're trading below that. You're trading, as you know, you're trading right around 24.56. So not a good thing to trade underneath the profile. However, what we can also see out here is this equity really broke out, busted to the upside with big volume back on March the 6th. I don't know what Sienna Corp does, but it was a big move, 17 million shares, wide-ranging bar, because if we go ahead and we complete the gap out here, it's a wide-ranging bar. So price has come back to what we'll call breakout area level 1, which was the low of the gap. That's the March 6th low out here, 24.59. We're at 24.55. It's doing it with light volume. Preferably, all these tests would have found support and never closed underneath it. Since it's really chiseling away here and you're looking for a long entry and you're below the bottom of a daily box, then your better setup is to wait for the price to come back to the real breakout area, which is really the two prices to look at. Where the gap began, the March 5th high, 23.72, or really a swing point or a lower low from a couple candle sessions just prior to that. That's what I would look for. So really your range to consider is going to be 22.96 if price were to get down there to 23.72. That's what I see when I take a look at the daily time frame chart for Sienna Corp. If we look at the weekly time frame for you, the top of the weekly box is 24.22. So maybe it's 24.22 where price finds support. I don't know. It's trading above it. It's short-term bullish, but the daily right now is struggling. So we're going to say short-term neutral or intermediate-term neutral more than anything else. The monthly, the top of the box is 22.18. Not really providing you with a ton of information. So them there are your profiles, Bob, in Colorado. Thanks so much for writing in. I hope that helps you out, and best of luck when you do enter the trade on Sienna Corp. We've got another question. This one comes in from, there we go. It comes in from Dan Y. in Clearwater, Dano. And Dano wants to know, I've been short the OIH by the June 15 puts, and I am just pennies away from my initial target. Do you see this going to the April lows, or are we about done with this retracement? Side and exit, all or half. Your thoughts, always valued. Well, thank you, Dano. So let's go take a look at the OIH out here. That's the Oil Holders Oil. That's the Van Eck Vectors Oil Services ETF. I knew I could get it out. And so here's just much like we looked at in Sienna, Danny, for Bob. Inside the OIH, if we just take a look at this, we don't take a look at light sweet crude, we'll do both. But if we were just looking at this, we'd be looking at this little gap to the upside. Gaps are your friends. And so maybe this was the reason why you were pennies away from your price target, because a gap is a sign of strength or a sign of weakness if it gaps to the downside. In this case here, a bit of a sign of strength. That number is 26.49. I don't know if that's Dano's price target, but it could be. And that would make sense to me. Now, the volume there was about 8.5 million shares. You've done 4.9 or 5 million so far. It is 8.9 on Friday. So it seems like, I don't know the exact volume, but it doesn't seem like it's just fallen by the wayside out here. So from a market profile standpoint, before Stevie goes and does some other work on some other charts out here, if we were to take a look at the weekly time frame out here, Dano, we can see that a brand new weekly profile has formed. It is a bullish structure in its creation out here, because the center area, point of control at 26.36, closer to the bottom at 25.66, then 27.76. Now, on the daily chart, the price level was 26.49. That was, hey, maybe that becomes your price target out there. And on the weekly brand new profile, I'd say it's 26.36. It is that center of the box out here. So now you've got to question yourself, because you're in these puts. You've got time elements out here and so forth to consider. You know, is there anything telling you or I that the OIH is just getting ready to crush it to the downside? No, not necessarily. Doesn't mean it won't happen. And, you know, what's the issue out here? What's the issue, Steve-O? Well, the issue, perhaps, is the signal, Dano. And this is where you don't have the time necessarily. You have a little bit of time. But what we do know about the OIH, and to the extent that we want to rely upon these TAS market profiles, which we do, we can see that the OIH has rejected the top of its monthly profile. Now, this doesn't really complete until Thursday, right? So I don't know where the OIH is going to be trading on Thursday. But if it's trading below 27.76 to the top of its box, if you can't bust them up, it could bust it to the downside. That would be 22.91. Doesn't tell us how much time it would take to do that. If we take a look at Stevie's other chart tools and we put up the OIH, this one says prices come back to support. And a level of support being the Tom DeMark setup, a trend line out here, that in essence was the low from May the 5th out here. Now that wasn't going to show up on the other screens, and that low was 26.65. And you can see that in essence that is what has been tested today. So Dano, I'm not saying to get out of the trade. I'm saying that if to answer the question, is price going to go lower? Because we took a look at profiles and so forth. The answer would be yes, if you see a close below the low of May the 5th out here. Just because it's tested it today doesn't say you need to exit the trade necessarily, but that's what you'd really like to see. And then it opens up the kimono. That kimono takes you back to the April 3rd level and doesn't tell you how soon you would get back there, but that really becomes the price target, which is the 23 level. Quickly, if we change over to a weekly time frame, see what else pops up here. Here's where you get that confusion. Not confusion, but when you look at a different time frame chart, you're going to get different information. It's not information overload, but sometimes, like Bob, wanted to take a trade in Sienna, and he wanted a long, I think he was looking to go long, and I was sensing, may have been an inaccurate sense, but long, and he was looking to hold it for an intermediate term time frame. And if you were in the OIH and you were looking to hold that for an intermediate term time frame, you wouldn't bail until you see it close below support. And support is Stevie's red line. That's 26.62. That's been tested. That is held. But for you, Dano, and your specific trade, because you've got a nice trade, as you pointed out, you'd also like to see, so you've got a level on the daily chart. You want to see price close below. And now you have a level on the weekly chart, which is 26.62 out there. So I think you were looking to possibly take some, maybe all out here. You know, does this information help you make a decision as to what to do? And if it doesn't, well, then let's go take a look at light sweet crude. Let's just finish this off, because from a directional standpoint, these two are going to trade typically in the same direction. Because I don't have the current contract set up right now in one of my instruments, and it would take too long to do during the radio program, and it would basically put the kibosh on my system, we won't do it. But when we look at the continuous contract, when we look at it, I'm going to have to look at the TAS market profiles for you. It's as simple as that. And that will then finish the question, what should Danny do with his beautiful trade in the OIH puts? That was a 449. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at light sweet crude right now. We're doing that for one of our Danners that wrote in. Dan, he's taking a look at whether or not he should exit some or all of his put position inside of the OIH, the oil sector ETF out here. And so not to give you information overload, but we're looking for clues. And right now, the screen we're looking at has got the 60, 240 daily and weekly set of market profiles. And the nice thing about market profiles, it's like if you were going into battle, you'd want to have, which we are each day when we trade these markets, you want to have this information on your side because it sets up levels of support or resistance. Like any battle, you can bust through a level of support or resistance, and it helps you to identify where price will head to next. And the question really that Danny put forth was, hey, should I exit because price is, in essence, finding support? Well, you have a brand new weekly profile that formed basically, I suppose, Sunday night, although I wasn't looking at my screen. But bottom line is, price is trading right now into the bottom of that box. So the next level, also the level for you to keep an eye on, 66.26. Do you jettison from here now? Do you take those profits now? If it were me, the answer would be no. And it would be no so it's up at support. I get that. What has to convince me that that support is going to hold? I would need to see levels of resistance on a shorter term time frame fail. So in the case of a 60-minute time frame chart, which has two profiles out there, let me do this. Turn off the lights. I'm just kidding you. Go ahead and turn off price out here. You'll see that this profile in a 60-minute time frame that formed above the prior one. Now that is short-term bullish, because when you start seeing profiles form above prior ones out there, that's a bullish change in trend signal. Knowing that and knowing that price hit the bottom of a weekly profile says, okay, I'm paying attention. Now what we also know, though, is that price is still not trading inside that profile box. The bottom, which is 66.61, you're at 66.52. Does 9 cents make a difference? It most certainly does. This is an hourly chart. Now, if we do see price, in the case of light sweet crude, get above 66.61, then chances are, Dano, price is going to head back to 67.35. It would probably be a close above 67.35. Of course, you'd want to know if there's a new profile that had formed or something along those lines. But if you were to see a close above that, then at this stage, support is held, and you'd probably go ahead and exit that position. So hopefully that's not too much information. And if it is, well, then I apologize. But let's go out to Ohio and speak with Tim. Tim, thanks for calling. Thanks for holding. How are you today?
Okay. How you doing, Steve?
I'm doing very, very well. Thanks so much for asking. And you want to talk about the spot volatility index, I suppose?
Well, yeah, been listening to you for a little while now, and one thing that you often refer to is spot volatility. And there was one thing that you said some time ago, and I kind of wrote down a note about it. Unfortunately, I wasn't that thorough with my notes. I don't know the explanation around it, so I thought, well,
no, that's okay.
I thought I would call and see if this is a similar pattern as you were referring to in my notes, which, as I said, I don't have quite all the information to. You had mentioned that if the VIX changed around 10%, and of course it's much more than 10% right now, that might prelude an opportunity, I should say close at 10%. That might prelude an opportunity for the S&P to turn around the next day. As I said, I don't have much more information in my notes beyond that. Hopefully that gives you some recollection of what you may have been talking about, and if this is a similar situation to when it happened before, because that was a spot-on prediction that you had the last time.
Well, geez, Tim, I don't have a clue as to what you're saying. There must be somebody. I'm just kidding you. No, it's perfect. It's exactly. You have it exactly right. And when we take a look at the spot volatility index, I don't know if you're watching us on TigerTV or.
In fact, I'm on the audio stream and I'm a little bit behind, so I was hoping that you hadn't covered this already.
I have not covered it. So we're good.
Okay.
So we're good. So the chart that I have up on my screen, you can watch the archive of it. What you will see is you'll see green and blue arrows on this chart. And those arrows represent days where the spot volatility index has a one-day rate of change either greater than a plus 10% or below a minus 10% out there. Which we're dealing with today, because it's up by 31% right now, is a day where we have a reading above 10%. What you should see, so if you were an equity futures trader and you were short-term short and you come into the close at 4 o'clock today and this spot volatility index is up above 10%, you would be anticipating that you would see some type of pattern where there would be at least some type of bounce inside the ES mini out here. It also may extend into the actual opening session tomorrow in the cash marketplace, and it can be a sign of a bottom, a bounce or a bottom out here. And if you look at all of the other blue arrows on my chart, you will see that 8.5 times out of 10 that is the case. That's why when you wrote those notes down and you say that that was a good call, it was just simply because I had the probability on my side of past experience knowing what that actually means. Why it works like that, I don't know. I just know that it does, and you would pay attention to it. There's also some other. So does that help answer at least that portion of your question?
Yes, indeed. And I guess the only follow-up is there any other circumstantial evidence that you can see that makes this situation different than any of the others?
Than prior ones? Well, here's a couple pieces of information. So that's a great question. You must be an attorney. I meant that in a kind way, because some people might say it, but there is additional information that we need to consider before we go ahead and make a ruling here. Right now, if I take a look at the spot volatility index and I compare it to where its counterpart 3 months from now is trading, 3 months out, if I do what I like to do is I like to divide those two. And when those two get to a result of 1 or greater, and right now we're at 1.01, that too is a sign of a bottom. I also like to compare it to what the 6-month contract is trading at. I don't have that on my screen at this stake here at this point, but what is also on my screen at the very bottom panel, so you want to catch the archive, is the Richard Arms Index, the TRIN Index out here. And when that gets to a level of 2, and right now it's trading at 1.97, so it's really kind of close enough for my work, that too can be a sign of a bottom or at least a bounce. So the other evidence, it's not circumstantial, it is factual evidence. If you get all of those things lining up with each other, then what you and I can say is there's going to be a bounce or one hell of a bounce or a bottom. And that today's market activity is nothing more than an overreaction out there. And that's how I would call it, and that's the other evidence to take a look at. And so when you get to your screen tonight, or and you can watch the archive of this show or whenever, you can just, if you just put in Steve Rhodes Trader's Edge today's date, it'll be on YouTube for God knows how long out there. So you can always go back and just spin it forward to about this segment here. Okay, my friend?
Yeah, and just as a quick clarification there, you're saying that that doesn't necessarily mean that that would lead into the opening of the market tomorrow, but it would probably
it would probably
the minis.
Absolutely. It would. Okay. It would probably. Absolutely.
I mean, is there any numbers that would suggest that it would reflect in the market tomorrow?
Hold on through this break, and we'll answer that question too.
Okay.
We'll get back with Tim in Ohio in just a minute, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're on the line with Tim in Ohio. We're taking a look at the spot volatility index. By the way, the Dow is off 413. S&P is down about 35 points right now. So, Tim, the one thing we certainly want to make sure is that what you and I are discussing right now, it all depends upon where these indicators are at the close of today's cash session at 4 o'clock. So things could look totally different, at 4 o'clock. But if you were to get a reading between the spot volatility index and its 3-month counterpart, VIX3M, is the signal, is the symbol used on my system out here, and that is above 1. Right now, it's trading at 1.01. The probability is high that what the market is doing is trying to form a bottom, or at least a very good trampoline bounce area. If you get the trend index reading that is at 2 or higher, that too would lead to a bounce or bottom. And if you have a one-day rate of change greater than 10%, that's a signal for a bounce or bottom. It couldn't get better, really, than that for trying to play that move? Is it the set of tools you'd use for a longer term or intermediate term? No, you'd have to really take a look at other things. What's the one thing, if the session were to close right now and it's 4:01 and you and I are talking, that we would need to be concerned about? I think I must summarize it. That, in essence, was your last question out here, is where the spot volatility index is in relation to its 50-day exponential moving average. Right now it's priced at the 50 days at 1575, and the spot volatility index is at 1713. When the spot volatility index closes or trades above the 50-day, Tim, that's where the most damage or carnage can be done to the S&P 500. So if a bottom, based on those signals, were to happen, come 9:30 tomorrow morning, we would see the spot volatility index trading below its 50-day level of 1575. That's how I would put it all together to answer your question. And I hope that that helps you.
Thank you so very much.
You bet. Folks, stay tuned. Your favorite polar bear, my favorite polar bear, David White, he's up next. After that, because it's Terrific Tuesday, you've got Tom O'Brien from 3 to 5, Andy Heck from 5 to 6. Thanks so much for being here. Have a great Tuesday. We'll look forward to seeing you on wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.